heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from London and San Francisco, this is Bloomberg Technology. Coming up, the first of the Magnificent Seven gear up to report results. We've got you covered.
Plus, Wiz walks away from Google's $23 billion offer. Details ahead.
And we bring you our exclusive interview with Meta CEO Mark Zuckerberg. But first, we check in on these markets. And Ed, it is a fight to stay in the green that the Nasdaq 100 is currently losing. We're off by about 0.1% as we speak. The Nasdaq, the bigger benchmark of more inclusive names, is actually still in the green. But more broadly, we are seeing some weakness from a number of the earnings that have just come, and indeed some that we anticipate, Ed, and that's what you're watching.
Yeah, Spotify up 12% in the session. Subscribers, paid subscribers, up 12%. Year on year. There's a lot of focus from the street on all of the cost-saving measures that they took and the bottom line. But let's stick with the Spotify story. The company releasing those 2Q earnings this morning and bring in Bloomberg's Lucas Shaw. Lucas leads Screen Time, which is our coverage of the entertainment industry and all things streaming. And Lucas, we are so back. Streaming is back. Talk me through Spotify.
Yeah, both Netflix and Spotify having very good earnings. Look, Spotify is finally starting to look like a profitable business. I think that's what investors are excited about. They had both profit and margin that was ahead of expectations, I believe. And perhaps most notably for them, they raised prices and still beat on their premium subscriber edition. So it feels like their ability to raise prices now and going forward will be very strong, which is good news for everyone looking at it. You know, they've done what Wall Street wanted, which is cut costs and start delivering profits.
And they have really focused in on the profitability over and above, perhaps more broadly, just subscriber growth in totality, Lucas. There was a little bit of weakness on the bigger, larger number of those that aren't just paying premium.
Yeah, I mean, I've been surprised over the last couple of years at their ability to continue to grow their customer base, not just premium, but the free. They've had a lot of success in India and Southeast Asia, which is, I think, part of how they've done it. But they've reined in the spending on podcasting. They are investing a fair amount in audiobooks, and I think there's some skepticism still as to how exactly that will sort itself out. But it's a company and it's a product that people really like. They are not canceling. Spotify has pricing power. And I think that, though there have been concerns about how that business would look, it's starting to feel like a company that investors can rely on.
Lucas, this might be a little out of left field, but I'm still really focused on podcasts. I just find the industry to be so vibrant. If you track the news flow, a lot of like individual names doing licensing deals for themselves, their own properties. Spotify, do they have anything to say about that?
Well, look, Spotify is now content to be a sort of neutral distributor of podcasts, right? They spent a bunch of money buying podcast networks, funding originals, kind of securing exclusive rights to shows because they use those podcasts and those deals to bring people in and to get people listening to podcasts on Spotify. That is now happening. Spotify feels less of a need to pay for people and feels like it can just benefit from ad sales from shows that it doesn't control or pay for.
The Swedish juggernaut, Lucas Shaw. We so appreciate you bringing us all things Spotify. Meanwhile, sticking with results out of Europe, and it's SAP. CEO Christian Klein joined Bloomberg to weigh in on his company's results. Just take a listen.
We are not only focusing on moving customers to the cloud. We look into their business model transformation. So when you talk about SAP, it's all about how can you actually grow your business. I mean, take ExxonMobil, one of our largest customers now in the cloud. They are moving towards renewable energies, and our software is key for that. Or when you talk about resiliency of supply chains, we infuse AI. We are connecting your supply chain with the operations of thousands of your suppliers. And that's why SAP is so relevant these days.
Let's bring in Bloomberg's Sonia Nguyen for more on this. And Sonia, shares at a record high. Is it all about AI?
Yes, AI definitely plays a key role in SAP's financial performance and business development. We've seen some good growth on the cloud revenue, and also the backlog seems very healthy. So we can expect a lot more of the growth to come later this year and in the coming months. As the AI had a significant role in attracting new customers, as well as incentivizing the shift from the on-premise solution to the more lucrative cloud business.
Bloomberg's Sonia Wind out of Europe. Thank you very much. Another tech company that's reporting today is Tesla. Let's discuss what to expect with Junheng Li, Warren Capital CEO and head of research, and getting myself organized, putting my posts in for the blog that will run later today. And I think a big focus is going to be FSD, Junheng. You've got a particularly interesting view on that. Why are you watching FSD so closely?
Because the car sale data are very transparent, and it's obvious that the car sales has hit a wall, whether in California, in China, in Europe. So in California, the data are very transparent. Sales down 24% year over year in Q2, and California being 25% of the US EV sales. And in China, it's down 7%. That's on top of very aggressive promotions. In Europe, it's a different story. There's a tariff coming up. Now, the Chinese-made car going to Europe starting this month will face 20% increase in tariff. So at this cross current, Tesla all of a sudden pivoted its story from EV sales to FSD. Essentially, FSD is a story of, okay, you buy a car, I give you a driver. So that's supposed to be a differentiation for Tesla car to get more share in the market. But it is our view, after speaking extensively to the researchers in the field, as well as the competition's AI effort, that it's a very immature product. It takes time to get higher quality data, probably a rework of the underlying narrow AI system, and waiting for more GPU cluster for this to work.
Full self-driving has actually been something both Ed and I have been playing with a lot, lucky enough to be able to do so. But why do you think the underlying technology, the overall scale of investment that Tesla needs to make, is so much larger than the market is factoring in? Because this is always the long-term bet, that Tesla is an AI play.
Yep, because Tesla's AI vision is a little bit different from everyone else. Everyone else in the industry relies on sensors in addition to the underlying AI software. But Tesla wants to differentiate itself as a unique play in autonomous AI. Therefore, it markets as the end-to-end vision-only AI play. But if you talk to people in the area, they'll tell you that it's a very difficult route. Because it needs a lot more extensive data input, and it requires a much more extensive AI system to truly get you to L5. So now you have this very big operation domain design, and you have limited hardware tool, but you want to achieve L5. So that's a very, very tall order.
Speaking of hardware, we were just showing some of the things that are top of mind for retail investors, right? They have a platform, say.com. They can vote or upvote their questions. What's missing from that is robotaxi. How critical is it that Elon Musk gives us a date, a new date for the robotaxi unveil?
Well, robotaxi, it's just one manifestation of its vision-only E2E, autonomous AI. But robotaxi, in fact, is easier to achieve than FSD because there's no one behind the wheel. So in terms of the legal liability, it's much crystal clear. So if robotaxi gets into trouble, it's Tesla that's going to fully compensate and financially, legally responsible for the accident. As opposed to FSD, as long as it's not fully autonomous and the Tesla doesn't claim 100% legal responsibilities, it's the insurance company needs to underwrite that risk. That's why you see lots of Waymos on the street in selective cities, but there's no Tesla robotaxi because it requires a different sort of like hardware, software, and AI program integration. Tesla doesn't have that.
We're used to perhaps being patient on Elon's promises. He's pushed back robotaxi. He pushed back Optimus just in the last day or so. Does that matter in the longer term if we are seeing a vision of AI? Look, this is also an energy company that does relatively well.
Well, sure, energy does extremely well, but energy is not something you give it 100 times the price to earning ratio, right? So, I mean, the stock is at 250. The company is supposed to make $2.50 this year. So effectively, you are giving it 110 price to earning ratio. Okay, so FSD story will get this to, where the company, where Elon Musk wants the stock to go. So the math is this. So FSD will allow the penetration to go up to 30% of all cars sold in the US. So US sells about 18 million cars. So that gives you 6 million cars for Tesla, because it's give you a car, give you a driver. So people will buy it for $45,000. And then the company makes 10% profit margin. And you give 30 times price to earning to that kind of a run rate normalized earning, just like you give to Apple. That gives you $2 trillion valuation. That's the story they want to tell to the investor base and pacify them. It might be true, it might not be true. And it might be someone else get there first, and Tesla is not. But if you give it 20% probability, that gives you significantly less market valuation than $2 trillion.
Well said, Junhang Li, Warren Capital CEO and head of research, as we try to vindicate that 93 times future earnings that is the valuation of Tesla. Look at what's happening with Alphabet, because it's not just Tesla out after the bell. Google's parent company is as well. We're up 0.5%. Not only are we focusing on search, cloud and AI, we're also thinking about the Wiz rejection of Google's $23 billion offer. We're going to be talking about that later in the show as well, Ed.
All right, coming up, we bring in Bloomberg's Emily Chang for more on that exclusive interview with Meta CEO and founder Mark Zuckerberg. That's next. This is Bloomberg Technology.
Today, Meta unveiled the largest open source AI model ever, Llama 3.1. The company is also updating its Meta AI service, like it's being billed as a rival to ChatGPT. In an exclusive interview with Bloomberg's Emily Chang, Meta CEO and founder Mark Zuckerberg opened up about his strategy and why he believes it's superior to competitors like OpenAI and Google. Just take a listen.
So you're releasing Llama 3.1, this family of models, big and small, including the biggest open source model ever, 405 billion parameters. What does that jump unlock?
I actually think the main thing that people are going to do, especially because it's open source, is use it as a teacher to train smaller models that they use in different applications. If you just think about like all the startups out there, or all the enterprises, or even governments that are trying to do different things, they probably all need to, at some level, build custom models for what they're doing. And it's really hard to do that with closed systems out there, whether that's OpenAI or Gemini, Google's thing, or whatever. And this is like, gets to a pretty core part of our philosophy is we don't believe there's going to be like one AI to rule them all. Our vision is that there's going to be millions or just billions of different models out there.
So not one God, but many? Is that the way to think about it?
Well, I don't think they're going to be gods, but I do think that to some degree, if you're like an organization and you think you're going to create like this one super intelligence, it does have this feel to me of like people trying to create a god, and that's just I find that both the wrong way to look at it, but just also very unappealing. There's almost 200 million creators on our platforms. They all are trying to build their community. People want to interact with them. There aren't enough hours in the day. Like I want to make it so that every single one of them can easily train like an AI version of themselves that they can make it what they want. So it's almost like a kind of artistic artifact that they're putting out there for their community that allows their community to interact with them, but also gives them control over how that interaction happens.
Facebook and you have been blamed for a lot of things, whether you agree or not. Why should we trust you with AI?
Well, it's a loaded question. We have gotten blamed for a lot of things. And I mean, look, I take our role in all this stuff seriously, and I think we've tried to handle all this as well as possible. I'm not sure that it's all been fair, but like, I'd like to think that we're an important and relevant company, so I think the scrutiny is generally healthy. One of the defining things around open source is that anyone can scrutinize the work. And because of that, I think it just puts a lot of pressure to make sure that the quality of the work that you're doing gets better really quickly.
That was Bloomberg's Emily Chang in her exclusive interview with Meta CEO and founder Mark Zuckerberg. And I'm delighted to say that Emily joins me here on set in San Francisco. It was so well timed, the interview, and it's critically important. I think back to the last earnings call where Zuckerberg basically said, we think Meta could be the world's leading AI company, but he's coming from behind a little bit. You did some catching up with him in that conversation.
Absolutely. And, you know, the scale of Facebook, Instagram, WhatsApp is incredible. So Meta AI, their chatbot, is already embedded across all of those products and Oculus as well, and you can use it as a standalone chatbot. But he says hundreds of millions of people are going to be using this by the end of the year. In fact, before the end of the year, which he believes would make it the most used chatbot in the world. So in just a few months, it's potentially going to be eclipsing ChatGPT. Now, we talked a little bit about the level of intelligence of these latest models, and he admits he still believes there's a gap between Llama 3.1 and the most advanced models out there, but they're already working on Llama 4, and he says they're closing that gap when that update comes out.
Emily, as you were mentioning in what he termed a loaded question, but look, he's used to criticism. But there's been a lot of criticism about the fact that this is open source and the quote-unquote danger that brings. How is he responding to that element of things?
Look, I think broadly, and this is what he's been saying now for many months, open source is more safe, is more secure. You've got all of these people around the world building on it, using it. If they see something wrong, Meta is going to get called out on it, he said, and we'll fix it. And the question is, though, what's in it for Meta? It's not that there's nothing in this for them. If the industry builds on this and it becomes an industry standard, then Meta has more sway in how the industry evolves. So he's saying, look, this is more safe, this is more secure, but yes, this is also better for us. In fact, he believes it's safer than the closed sources approaches of OpenAI or Google, because what's happening under the hood there, you can't necessarily see when something goes wrong. And what's really interesting is, without open source, he says, I couldn't have built Facebook. This is a deep-seated part of his philosophy that he's had for 20 years. It's definitely interesting. He understands why there's been pushback, why some people see him as this sort of unlikely champion of open source, given how Meta and Facebook and its platforms have evolved, but he really doubled down that this is the best way forward.
There is Mark Zuckerberg, the gold chain wearing, new haircut, MMA fighting man. And then there is Mark Zuckerberg at the helm of a critically important company. Mm-hmm. You spent time with him at his home in Tahoe.
I did.
What did you learn about either of those characters?
I learned how they relate to each other.
Okay.
And, he just seems... I've met him many times over the years. I've interviewed him before. He just seems more comfortable in his own skin than I've ever seen. He also taught me how to wake surf. Zuck has all these side quests. Wake surfing is one of them. And, we talked about how he just has so much energy. These things keep him focused. Priscilla, his wife, was there as well. She's like, I prefer when he's doing all these other things because he just has so much energy to burn off. But my main takeaway was that he's not going anywhere. If you think about Jeff Bezos, who left Amazon, Larry and Sergey, who left Google, there are all these major tech founders who have since stepped back from their companies. Mark Zuckerberg isn't going anywhere. He said, look, I want to see this AI wave play out. It's 10 or 15 more years before the next platform is going to emerge, and I'm going to be around for that.
Emily Chang, can't wait to see more of the interview. We thank you so much. Tune in to this exclusive interview with Mark Zuckerberg online or on Bloomberg TV tonight at 6:30 p.m. Eastern Time. We got some breaking news for you. Apple, a foldable iPhone may be released in 2026. This is according to the information. We're currently at session highs on Apple stock. On the back of that, potentially it could fold widthwise like a clamshell, according to people familiar, and it would make it similar look to that Samsung Galaxy X Flip, Z Flip, in fact, that was released all the way back in 2020. We keep an eye on Apple shares. This is Bloomberg Technology. Big news in cybersecurity. The startup Wiz has rejected Google. The company has turned down that Alphabet $23 billion takeover offer, sticking instead to its plans for an IPO, according to a memo that Bloomberg had seen. The move marks a blow for Google, of course, which is trying to catch up to Microsoft and Amazon on shoring up its security offerings for its cloud services. We're pleased to bring in Dana Wellman for more. And Dana, talk to us about why this was so integral to compete with Microsoft Azure, to take on the other competitors in AWS in the space of cloud.
So Wiz would have rounded out Alphabet's cybersecurity offerings. The company had already acquired Mandiant a couple years ago for a little over $5 billion. And Wiz would have just rounded out the portfolio with a real focus on detecting cyber threats in various cloud platforms. It plugs into a number of major existing platforms, including Microsoft Azure, Amazon Web Services. And these are Google's, Alphabet's major competitors in the cloud space. And it is an area where, as much as Google is one of the major known names, it does still trail Microsoft and Amazon in that major critical space.
You know, part of the interesting part of our reporting, according to sources, is that the leaders at Wiz are also conscious about the regulatory environment, antitrust. What do we understand there, Dana?
So this indeed would have been a really risky deal for Google had it had the agreement gone through. Rather, had Wiz agreed to an acquisition. Google is already facing various regulatory challenges on everything from its search business to its advertising tools. And probably even a much smaller acquisition would have drawn some regulatory scrutiny. And we're talking a $23 billion acquisition. This would have dwarfed previous Alphabet acquisitions, certainly even the Mandiant one that I just mentioned, which was about $5.5 billion. And it would have been a huge risk indeed, which according to our reporting was one factor that the Wiz team considered in choosing to IPO instead of being acquired. That not only did it feel that it could build more value as an independent company, but had some concerns about whether it could even get past those regulatory hurdles in the US and possibly elsewhere.
Bloomberg's Dana Wellman, thank you. Now, coming up on the show, we're going to be joined by Noah Aitchison, author of the Crypto is Macro Now newsletter, to get her take on the newly approved Ether ETFs from New York, not from New York, gosh, from London and San Francisco. This is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco.
And I'm Caroline Hyde in London for the week. Let's check in on these markets because I want to point you to what other earnings we've had out today. And they've actually been helping drag this market a little bit softer. NXP Semiconductors, Dutch-based company listed in the US, off by more than 9%. This is, we see revenue, particularly in the autos chip sector, just being weaker once again. And that's signaling maybe some testing times from other chip makers. We're looking at Comcast also down, let's call it 6%. That's on the back of Comcast. Actually, the Universal side of the theme parks not looking good, off by more than 5%. And once again, look, we're seeing a little bit of struggling with wireless and broadband, even though perhaps it wasn't as bad as expected. This isn't, I'm afraid, perhaps to my producer, not the right company to be looking at. Logitech is the one that we wanted to have a look at. This is the maker of mice and the like. Sorry if I sent round the wrong particular company for this, but ultimately we have been seeing it on the downside after they pointed to some slower growth in the future. I'm looking at Alphabet on the higher side, up some 0.7%. We look at what the earnings are going to be like as they decide not to be buying Wiz. It seems as though Wiz has been pushing back on that offer. Tesla on by more than a percentage point. All eyes as they come out with their earnings. What will they say in terms of robo-taxi, in terms of AI? Optimus, the future. Texas Instruments off by more than 3%. As I say, NXP really signaling some weakness in other semiconductor names. And I look at Mattel. Look, is this a tech stock? Look, it had some Barbie success. We, of course, know it is an IP company with Hot Wheels and the like. We're off by more than 5% as they are going to give us their earnings after the bell. But they seem to be pushing back at any, well, thus yet. We're still wondering whether or not they remain an independent company. This company for now says, look, we like our strategy if we remained independent. Al Catterton, of course, reports that they have been eyeing that particular company. Ed, what are you looking at?
The world of crypto and ETFs. Regulators approved the first US ETFs investing directly in Ether. That's according to filings and statements from various asset managers. Now, trading is imminent. So let's bring in Bloomberg's Katie Greifeld, friend of the show, friend of mine, expert in all things cat meme related, but also ETFs critically, likes crypto. I think that why this story is so interesting, we've been talking about it so much, is that it's a good test for wider interest in crypto markets, right?
You're exactly right. Demand beyond Bitcoin, obviously the spot Bitcoin ETFs that started trading in January were a wild success, really blew past expectations. We have seen 8 spot Ether ETFs begin trading in the U.S. today, and these are expected to not draw as much interest, but trading volume so far has been pretty impressive. Over 300 million in trading volume so far today. But if you take a look at BlackRock's Ether ETF in particular, the ticker there is ETHA. Volume after the first hour was about $50 million. Maybe it'll get to 200 million by the end of the day. Just for context, BlackRock's spot Bitcoin ETF did about $1 billion on its first day of trading. So impressive, but not quite Bitcoin levels.
It was never going to be Bitcoin levels, was it, Katie? Can you just mark us up to what we all anticipated and whether or not the flows are good enough for what the market needed to see?
So if you take a look at what the consensus is right now, there was an interesting note from Wintermute Trading, for example. Typical analyst projections translate into annualized inflows of about $4.8 to $6.4 billion for these Ether products. That's in the first year, which, again, is not nothing for a new ETF debut, especially in a new category. That's pretty impressive. But it's just that the Bitcoin ETFs received so much enthusiasm, net inflows of $17 billion, even with the outflows that you've seen from GBTC. There's some pretty difficult comps there, but again, it'll be interesting to see how these develops, whether financial advisors in particular will embrace these. There's a lot of question about how do you market Ether? Bitcoin is digital gold. What's the sales pitch for Ether to a non-crypto audience? Those are some of the questions that need to be answered.
Oil, silver, we've heard it all. Katie Greifeld, our ETF queen, we appreciate it. Look, let's get an insider's take. Noel Acheson is author of Crypto is Macro Now newsletter. You based in Europe a lot of the time, and Europe already has exchange-traded notes related to ETH. What are some of the issues, do you think? Is it largely because it can yield yet more if you were indeed staking it, and that's going to limit it to a certain extent?
Exactly, Caroline. I think last time I was on this circle, I was saying it's a bad product, and that's a relative judgment. The staking rewards, as you pointed out, are not being distributed, which is effectively a 3.5 percentage point less return for ETH holders. But you have to remember, Katie's totally right. The volumes so far are pretty good, as they should be. It's not reflected in price because the market is not efficient. And there are many people who will happily see that 3.5 percentage point relative loss as a convenience fee. As we have many funds that can't hold anything that isn't traded on a regulated exchange. And Caroline, there is a very important...
Noel, I'm sorry to interrupt you. We're having some issues with your audio. You're a regular guest on the show. We're going to work on it. We'll get you back as soon as possible. Noel Acheson, author of the Crypto is Now, Macro Now newsletter. Thank you. Right, it's time now for Talking Tech. And first up, CrowdStrike CEO George Kurtz is set to testify before Congress. A U.S. House committee has called on the executive for questioning after last week's botched software update that caused global computer outages worldwide. Additionally, the U.S. Department of Transportation has opened an investigation into Delta as it continues to see major flight cancellations and delays from the CrowdStrike outage, despite rivals' return to normality. Plus, shares of Kakao falling in South Korea as authorities have arrested its founder, Brian Kim, over alleged market manipulation. The billionaire internet entrepreneur was taken into custody after hours of deliberation on fears of, quote, evidence destruction and flight. Kim and Kakao spokespeople deny the allegations. Okay, coming up here on Bloomberg Technology, we're going to have to take a look at the world of AI and robotics, and that's through the company Mytra. CEO Chris Walti joins us next on the company's launch. This is Bloomberg Technology.
Talking venture now, an Iconic Capital, an investment firm known for, well, managing the fortunes of Silicon Valley's elite, has said it has raised $5.75 billion for a new venture-focused fund. Yet another example of the continued concentration of dollars in a handful of big VC firms. This year, over $7 billion went to a group of funds at Andreessen Horowitz, another $3 billion to Norwest Venture Partners. Ed, what have you got?
Now, Mytra is a company focusing on industrial productivity with AI, but also three-dimensional robotics, and just today launched with $78 million in total financing through a Series B. We're delighted to be joined by the CEO and co-founder, Chris Walti, who's also a former Tesla materials engineer who helped build what was Tesla bot, now Optimus. We'll get to that. This is interesting. It's not necessarily a crowded field, but I'd say we've had several startups on the show focusing in the field of robotics. What is specific about your technology and your ambitions on how it's used in the real world?
Sure. Morning, Ed. Thanks for having me on the show. Appreciate it. Yeah, I mean, the challenge is that 90% of warehouses today have no meaningful automation. So there's a product market fit gap. At Tesla, we experienced some of the challenges with the current state of automation. We endeavored to make something extremely simple, user-friendly, and the more simplistic we could make the system, the more cost-effective and universal and flexible the solution could be.
And the more people want to use it. You've got Fortune 100 customers already, Albertsons, for example. What is it that the robotics are solving for them already?
What is it that robotics is not solving for them? Well, if you look at the traditional state of robotics,
is solving for them. What is the positive? What are you finding that is already the application, Chris?
Oh, sure. What is it we are solving? Yeah, so we're focused on moving material at the pallet level. It's the bread and butter of supply chain. Almost everything you see around you has been on a pallet at one point, and we're doing that a much more simple and an efficient way through the use of just two products. It's really a steel lattice structure and a bot that moves in full 3 dimensions, which allows you to basically use software to define how your warehouse operates versus traditionally using mechanisms like conveyors and elevators and that sort.
$78 million. I can't tell if that's quite a lot of money or not enough money to launch a product like this, scale it and put it into the real world. You tell me.
It sounds like a lot, of course, but you have to keep in mind that there's 7 different engineering disciplines, and it's incredibly important to make the product reliable, scalable, et cetera. I mean, automotive companies spend quite a bit of money on the manufacturing and the development to bring an electric vehicle to market. We're essentially bringing a small electric vehicle that not only moves 3,000 pounds in the horizontal plane, but also moves it up and down.
Reliable, scalable, and in a near-term ideal of being useful. Look, what's so interesting is your background, having been at Rivian, but also at Tesla. Look, we're about to get Tesla numbers. We're about to fixate upon Optimus and, once again, a slight delay to its practical use cases. What was it like at Optimus, and how did you decide that you had to do something different because, perhaps, of the delays there?
Yeah, my background at Tesla was a very interesting one. I had experience both on the traditional warehouse side and trying to get material flow up and running to support Model 3 manufacturing, and then was also asked and tasked to lead the Optimus program. Humanoid robotics, absolutely fascinating. Had a blast working on those problems and leading that team. But ultimately, it's a bit of a 9th inning problem, and there's innings 4, 5, 6, and 7, et cetera, that still need to be solved. And for the next 10 to 15 years of my career, as well as the rest of the team that's joined us on this mission, we're really solving a very critical problem in supply chain with a very simple and direct form factor.
I guess philosophically, but also from an engineering perspective, why is the direction you're going better than the use case of a humanoid robot such as Optimus in the warehouse or manufacturing environment?
It's a great question. I don't know if one is better or worse than the other. I would say they're solving 2 very different problems, right? What's very unique about humans is their ability to manipulate and reason at the edge. And that's where a humanoid robot is very powerful. But when you look at what's moved around in a warehouse and a manufacturing facility, a lot of that material weighs hundreds, if not thousands of pounds. And that's not something that a human really is designed to do. So you can think of what we're building at Mytra as something that's very complementary, orthogonal to humanoid robotics or humans in general.
Okay, so you're going to work in line, sort of in a sophisticated manner to work alongside the future of an Optimus. You've got strategic investment. I'm assuming you've already raised, what, $78 million in funding. How expensive does this get? How many more rounds of funding do you need, Chris?
Yeah, I mean, it's unclear at this point. Our goal is to execute as quickly and as efficiently as possible. You know, the next 2 years we'll develop the system, invest in the team, and launch to a few more customers. And in that time, you know, that we'll be generating revenue and you know, the funding environment in 2 years, who knows what that will be like. But it's safe to say that funding can help accelerate the mission. It's not necessarily always required for a company to exist.
Particularly if you're aiming to be revenue generating, maybe even profitability coming into your lexicon. Mytra CEO and co-founder Chris Walti, great experience that you have. Great pushing us forward on what to expect out of robotics. Ed, what have we got?
Well, from one Tesla alumni enterprise to another, a couple of weeks ago, I took a trip on a boat, an electric boat. And it's from startup Arc, looking to launch later this year. Here's what it's like.
This is the Arc Sport, a fully electric boat from Los Angeles-based Arc, and it's built for water sports on lakes and wide rivers, but it can go in salt water. So we got to test it out in the San Francisco Bay. We set off from Sausalito Harbor, and with Alcatraz and the Golden Gate Bridge coming into sight, we took it up to full speed and we let her rip. Arc Sport can get up to 40 miles per hour, but it has a surprisingly intuitive drive-by-wire system. The operating system also looks very similar to Tesla's in aesthetic and functionality. Using front and rear cameras, you can see the front and check on the wakeboarder who's in the back or make sure no passengers have fallen off. Luckily, none of us did. The boat has 500 horsepower from a 226 kilowatt-hour battery pack. That's almost double the battery capacity powering Tesla's Cybertruck. It's meant to give you a full day on the water, about 4 to 6 hours of driving time. At $258,000, Arc Sport's price is comparable to gas-powered boats from names like Mastercraft, but the direct-to-consumer sales model means there's no dealer in the middle taking a cut. That means Arc can spend a little bit more on the design, the experience in the boat, upscale sound systems, and plush seating. It's also got a really cool thruster-jet system for docking up, and it can charge to 80% in like 45 minutes. The boat's designed by a team of former SpaceX and Tesla engineers, and it's shipping later this year to go after a $2 billion market in 2024 for wake boats.
$258,000 shipping later this year. Maybe Emily Chang and Mark Zuckerberg have got their eyes on one, Karen.
Oh, water sports. Meanwhile, coming up, tech giants Apple and Micron, they're paying Ed a visit to China as the US ramps up chip curbs. This is Bloomberg Technology.
Beijing.
I know you've always been fascinated by China, and you learned to speak Mandarin. And what do you know about where China is on AI and AGI?
I don't personally know a ton. There's this question, which is how should the U.S. approach kind of AI competition with China? And there's one strain of thought which is like, okay, well, we need to like lock it all down. And I just happen to think that that's really wrong, because the U.S. thrives on just kind of open and decentralized innovation. I mean, that's the way our economy works. That's like how we build awesome stuff. But I think the leading companies should work with the U.S. government and make sure that our kind of national defense and things like that have sort of a perpetual first mover advantage on the leading technology in the world.
So we win the AI wars this way.
I think there's the question of what can you hope to achieve. If you're trying to say, okay, should the U.S. try to be 5 or 10 years ahead of China? I just don't know if that's a reasonable goal. So I'm not sure if you can maintain that. But what I do think is a reasonable goal is maintaining a perpetual, 6-month to 8-month lead by making sure that the American companies and the American folks working on this continue producing the best AI system.
That was Bloomberg's Emily Chang in more of her exclusive interview with Mark Zuckerberg. And remember, you can tune into the exclusive interview with Mark Zuckerberg online or on Bloomberg TV tonight at 6:30 p.m. Eastern Time. Let's keep the conversation going on China. As US chip curbs tighten, leaders from tech giants Apple and Micron paid a visit to Beijing. I want to bring in Bloomberg's Mike Shepard, who leads our coverage at the intersection of politics and technology. Apple's COO, Jeff Williams, and Micron's CEO and President, Sanjay Mehrotra, go to Beijing. It tells us how important, despite the political backdrop, the market is and the supply chain is.
It really does. And it was a great segue into our discussion now to hear from Mark Zuckerberg, too, about the importance of China and this tension between the government here in Washington and what the industry around the world sees in the world's second largest economy, which is opportunity, both in terms of a large consumer market and also the importance of the production and supply chain lines that are embedded in China as well. So as you hear from Zuckerberg and as you see in the visit of these two key executives, China is super important for their continued growth and development.
Basically, Mehrotra and Williams, they're both part of this US-China Business Council, right? And I'm kind of trying to understand how much you think that sort of a council really achieves, how much they are able to get business done amid the tit-for-tat from a geopolitical perspective.
Well, it does counter the tit-for-tat, and that's a great question, Carolyn, because you do see all these concrete actions emanating from the Biden administration in the form of export restrictions. These are measures aimed at curbing China's access to advanced technology, especially semiconductors needed to power technology like artificial intelligence that Mark Zuckerberg was just talking about. Now, having this U.S.-China Business Council go and meet with very senior officials, including the Vice Premier, Hu Lefeng, and the Foreign Minister, Wang Yi, these are important officials to meet, and it carries some symbolism. And it allowed the Chinese to convey to the American business community at a very high level that, look, we still need you. We realize that politically there are some tensions, but we do not want to see this decoupling that some in Washington have been pushing for.
Just really quick, Mike, we can't get away from the US presidential election. But one strategy of the US is also to lean on its allies in respect of tech curbs in China. You know, what's the chatter in that respect in D.C.?
Well, that's a great question, Ed, because right now what we're seeing is a little bit more reluctance in escalating those restrictions on technology even further. We've seen pushback from the Dutch and the Japanese against efforts by the U.S. to get the makers of chip-making machinery to dial back on servicing and the sending of spare parts to China for some of those machines used in the production and the fabrication of semiconductors.
All eyes on the Dutch, the Japanese, China, US. Mike Shepard is always across it all. We so appreciate it. Thank you. Now that does it for this very busy edition of Bloomberg Technology, Ed.
Very global. London, New York. We were even in Austria at one point. Check out the pod. Big shout out to the pod wherever you get your podcasts, Apple, Spotify, and on iHeart. A lot still to come this week in earnings. This is Bloomberg Technology.